Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets look poised for a positive close in 4 days with tech companies leading the rally today. Cipla recovers from early morning blues after the company clarifies that 8 observations made by the US FDA on its Goa plant is procedural in nature. Biocon is looking to go big on biosimilars. It's also exploring the option of selling part of stake in its research arm Syngene. State Bank of India moves the Supreme Court seeking to get a stay on an earlier High Court barring Reliance Communications from selling its business to Reliance Jio. Also on the show, we discuss the legalities of the UltraTech Binani deal with Anil Singhvi of ICAN Advisors, an exclusive interaction with investor Prince Alwaleed bin Talal on how he got caught up in the Saudi corruption scandal. All that coming up in a moment, but focus on the markets as always. And it's technology stocks, interestingly, are leading the pullback today. Neeraj is here with a closer look.
Yeah, so there's a bit of a pull. Actually, you know, Harsha, this morning when we were doing the trade setup, almost all indicators were looking negative. Below some key moving averages, Nifty Bank below some moving averages, volumes on the upside, not so much, but on the downside a lot. So when everything flows in one direction, you typically tend to believe, okay, now, you know, there's something wrong and things will turn around. They've turned around today. We're not saying this will last or no. RSI indicators anyways indicated there's a bit of a divergence between the trend that was shaping up, etc. So a bit of a bounce today. VIX has come off a bit as well. And you're right, IT, to an extent, metals have actually bounced back. Steel companies like SAIL, for example, are doing reasonably okay for themselves. So it's Nifty IT, a bit of metal flavor out here, and some beaten down pockets like sugar also, which are coming back and bouncing back. So the export duty has been scrapped on sugar. The 20% export duty has been scrapped. And almost all of those sugar names, large, mid, small, well, all of them are technically small, to be honest, after the carnage. So all of them are trading reasonably okay for themselves in the session today. Market breadth, well, positive, not so much, but yeah, I mean, reasonably positive. If you just look at the advanced decline ratio, you will see that just about bobbing between the red and the green, which is why I said that it's not a done deal as yet that this will last, but if indeed we strengthen a little bit, expect that breadth to open up a bit. For now, the large caps are doing well, sans banks, and which is why banks are still trading, or the Nifty Bank must still be in the red. It's the non-banking names which are giving that bit of a support there on Q. The Nifty Bank trying to keep its head above the water, but still trading marginally in the red today.
Neeraj, thank you for that. I'm just trying to get my eyes on where the rupee is trading at this point in time. It's about 65. The reason I'm talking about the rupee is because traders are counting on the RBI to keep buying dollars. They may have to think again. A widening current account deficit, slowing capital inflows, both into the equity markets and in the debt markets, may in fact tie the RBI's hands. Shubhadip Sarkar of Bloomberg News is here to explain to us what's going on in the money markets, and it's not looking good. Multiple factors.
Yeah, Harsha, we have been looking at the RBI's dollar buying, and it's been a net dollar buyer over the past 12 months through January. That means practically for the whole of 2017, it's been a net buyer every month, totaling $36 billion, which works out to a run rate of $3 billion an average per month, which is quite a big lumpy chunk. Now the point is, with the current account deficit widening, I mean, it's clearly we are seeing that the fourth quarter current account deficit numbers that came out last week, we saw widening to 2% of the GDP from a 1% in the third quarter. Correct. And for the whole year as a whole also, we are looking at a broader, wider, nearly a doubling of the deficit over the last financial year. Going into FY19, the coming financial year that begins April, we might see a further widening. Now, the whole question is, how will the flows be enough to kind of sustain these kind of deficits?
You're talking about the foreign inflows.
Exactly, foreign inflows. The one good thing is because of some structural reforms, the FDI numbers have been much better. Now we have to look at the portfolio inflows. But on the portfolio side, it's not looking too good at the moment. We have seen bond flows are negative for this year. We have seen equity inflows of around $1.6 billion till date in this year. But if you compare that with over the same period of last year, 2017 first quarter, we had about an 11 billion of inflows across bonds and equities.
Okay.
So that's
let me just reiterate that. Last year, first quarter of calendar year 2017, we had $11.5 billion equity and bonds put together. That was a buy.
That was a buy.
And in so far this year, it's been a $1.5 billion sell on equities alone, and about
one and a half buy on equities and a sell on bonds.
And sell on bonds about 400 million.
That's right.
So I mean, obviously this is skewing the way the currency is moving, isn't it?
Exactly.
And therefore the RBI's view.
That's right. So the view is that the intervention will taper out over the coming months. We may not be seeing such a big presence of RBI on the buy side in the market, and probably the central bank may have to dip into the reserves going ahead in case the deficit is not filled by the inflows and FDI combined. So there are some views where there might be a marginal need to dip into the reserves going ahead. Though I must also put a caveat that it's not a very alarming situation as yet, because the view is that 2.5% is still 2.5% of deficit. It's still a comfortable number for India in terms of financing the deficit.
Okay, I have one quick question, Shubhadeep. This is about market sentiment. We've seen the way how bond yields have been behaving in the last couple of weeks, how state banks are not participating and so on.
That's right.
And the sentiment broadly has been over. I speaking to tell me that it's been bearish.
Right.
It's not reached there in the FX market, has it?
No, it's not that bad in the FX market. I mean, the bond market carnage obviously had occasional spillovers into the FX market, but the FX market has been broadly steady, and flows to that extent have helped. But going ahead, we have to see how oil prices behave also, because that's a critical factor in how
in terms of outflows. Okay. Thank you so much for that, Shubhadeep. That's where the currency markets are. Let's talk about aviation now. 10 million passengers, at least nearly 10 million passengers traveled by air in February in what is typically considered to be a lean month for airlines. Soumit Sarkar breaks down the aviation data for the last month to see how much the industry has grown and which airlines have flown higher than the others. Soumit.
So if you see in the month of Feb, the growth reported was the highest in the last 13 months. Now, more than 10.7 million passengers flew in this month, thereby reporting a growth of 24.1% in Feb compared to the last year, which was the highest that the industry has seen in the last 13 months. Now, this growth was supported by Go Air, Indigo, Air Vistara, Air Asia and Vistara, because these four companies grew at a rate higher than the industry rate. Now, Go Air's passenger growth was around 36%, while that of Indigo was 26%. Air Asia and Vistara grew at a rate of 92% and 42%. Now, this is the second consecutive month where Indigo has managed to grow at a rate higher than the industry rate. Now, on the passenger load factor, that is the capacity utilization, now that increased for all the major airline companies. Now, 5 airline companies have reported a passenger load factor of more than 90%. Now, this has happened for the first time in at least 5 years. Now, the Jet Group has reported 90% plus passenger load factor for the very first time. SpiceJet's passenger load factor came in at 96.3%, which was the highest ever, and this was the 34th consecutive month where the company has able to report a 90% plus passenger load factor. Indigo came out with a passenger load factor of 91.8, which was at its nearly 3-year high, while Vistara reported 91.2 and Go Air reported a passenger load factor of 90.4%. On the market share front, if you see, Indigo has consolidated its position. Its market share remained at 39.9%, which was 40 basis points higher compared to the last year, while smaller players like Go Air, Air Asia and Vistara have captured market cap from other larger peers like Air India, Jet Group and SpiceJet. Air India's market share fell from 13.5 to 13.2. Jet Group's market share came down from 18.3 to 16.8, while that of SpiceJet fell from 13.1 to 12.4 in Feb 2018. Now, if you see, the engine issues that the Indigo has been facing has again bogged them, and in this month of Feb, their cancellation rate was again higher than that of the industry average cancellation rate. In the month of Feb, it was 1.3, while that of industry was close to 0.8, and this is the second consecutive month where the cancellation rate was higher, and this is expected to persist in the month of March because the company had grounded aircraft, which resulted into cancellation of more than 900 flights. Now, because of this engine issue, the company also lost its on-time performance position to SpiceJet in the month of Feb. Now, SpiceJet for 4 top metro airports has reported an on-time performance of 78%, while that of Indigo was 74.8. And this is the second time in the last 4 months where SpiceJet has outperformed Indigo when it comes to on-time performance.
So, thank you for that. Let's talk about the pharma space now, and 2 stories. First one is on Cipla. The US FDA has made 8 observations on Cipla's manufacturing facility in Goa, but the stock has recovered from the day's lows after the management clarified that the observations were merely procedural in nature. Darshan is standing by to tell us what those observations are. Darshan.
So Harsha, there are 8 observations in total. Doesn't seem serious. The first observation is the only one that seems serious because it deals with failure to review out of specification issues, and this is a repeat observation. So Cipla will have to actually go ahead, do a lot of testing and then report to the US FDA in terms of what is happening. The other observations is basically in terms of procedural and return observations. The second one deals with documentation. The third talks about lab records incomplete. The fourth talks about establishment test procedures that were not being followed. The fifth speaks about establishment of no visual examination of reserve lots, appropriate lab controls, quality control and equipment. So basically, in terms of you looking at it, it does not seem serious in nature. Some of them are procedural in nature and actually will need to a little bit of tapering to do, in which they will be able to report to the US FDA. Now, it's a large plant. It's one of the largest plant that caters to the US markets. Now, almost 25% of the US sales comes in from this plant. Of the total US sales, actually caters to oral solids and the inhaler sales. Now, what did the management say that caused the stock to move in much higher? They said that it's a product-specific inspection and not a plant-specific inspection. So that is the first comment that the management gave, and they believe that the observations are procedural in nature, and they will be able to go ahead with it. They also clarified that close to 3 approvals have already come in from this plant post the inspection, which gives an indication that there's nothing seriously wrong with the plant. But 8 still is a large number, and the first observation is kind of serious, but nevertheless it seems that Cipla will be able to get out of this.
Darshan, thank you for putting that in perspective. That's Cipla for you. The stock has recovered since morning. The other one that we're tracking today is Biocon. Biocon is betting on biosimilars to unlock $1 billion worth of opportunities. In an interview with Bloomberg, Kiran Mazumdar-Shaw explained how this nascent industry can change Biocon's fortune. Ari Alstetter from Bloomberg News, who's filed that report, now joins us with some key takeaways. Ari, thanks for joining in. Why is Kiran Shaw so bullish?
Well, the main reason is because they have one approval in the biosimilar space in the U.S. You know, it's obviously the biggest pharma market in the world, the most difficult regulated market, and they got it. That's a very rare thing. There's only, 8 other biosimilars approved in the U.S. So the fact that they have one is a real feather in their cap, and they're taking this as a validation that, you know what, if we can get one, we can get more. And so if they can get more, then this revenue will just grow. The other thing that contributes to this forecast, I think, is that there's not a lot of competition, obviously in the biosimilar space in general, but in the drugs that they're in particularly. They have this approval for trastuzumab, which is a copy of a big multi-billion-dollar selling breast cancer drug, and no one else has approval for that yet. So if they're the only biosimilar in the market, then they calculate they'll get a bigger percentage of the market in total.
Okay, so are all those regulatory challenges that Biocon has been going through, is that behind the company?
Well, no. How this works is you know, it's a series of discrete battles, not just one exactly. Sure. So every single approval process is its own regulatory, you know, win or lose. So for instance, there's another application they have before the US FDA. It got sort of delayed because the FDA came back and asked for more information, and now the FDA has told them, okay, you'll get an answer on this one by June. In Europe, they had these 2 applications in, but both those got delayed because the Europeans inspected their Bangalore plant, found there were some things they didn't like, those problems had to be fixed. So now they say, well, those approvals could be had by September, but each of these distinct approval processes is its own possibility for problems. So you can't say that everything will be smooth sailing from here on out.
Okay, one last question. So I also understand that they want to sell a part of their research arm, that's Syngene. What do they aim to achieve by that process? Well,
I mean, basically, these 2 biosimilar drugs they have aren't the end. They have a big slate of other biosimilar drugs that they're trying to work on, trying to bring to market. Now that's a very expensive proposition. Kieran estimated it'll cost about $1 billion over the next 5 years to bring that portfolio to market. So they need to get that money somehow. They're hoping that a lot of that funding will come from revenue from the drugs they have already on the market or that are coming to market. But if not, they're looking at other options. One could be doing an IPO in their biologics unit, particularly letting shareholders invest directly in that unit. But another could be they have like a 73% stake in this contract research arm, Syngene, and they're looking at possibly selling part of that stake to raise some cash.
Ariel Seda, many thanks indeed for joining us. That's Biocon for you on what they plan to do in future. But the big one today is on Binani. It's a deal that's thrown a curveball at the entire insolvency process. Binani Industries has entered an agreement with UltraTech to sell over 98% stake in Binani Cement. UltraTech will in turn issue a letter of comfort to Binani's lenders. The lenders, however, are not too pleased. Vishwanath Nair joins us to tell us why. Vishwanath, what's going on?
Right, Harsha. So as you correctly pointed out, there has been a side deal between Binani Industries and UltraTech, wherein about more than 98% stake in Binani Cement will be sold to UltraTech, and UltraTech is willing to pay about 7,266 crore. In exchange, what UltraTech is essentially going to do is it is going to issue a letter of comfort for the lenders. Now that is something that was put out on the stock exchanges yesterday. Following this, when the lenders were consulted, they said that they have not yet received any formal plan from UltraTech as to how they're going to repay this money. Also, they said that a letter of comfort is likely not going to be enough for the lenders to drop the insolvency proceedings against Binani Cement. They say that at this point in time, they have met and they've agreed that Dalmia Bharat is the preferred bidder, and that that company is going to take over Binani Cement according to what the Committee of Creditors has decided. So on the basis of that, they're going to continue supporting Dalmia Bharat. And on the 22nd of March, when the NCLT is going to hear all the petitions in the matter, there's UltraTech's petition, there's Binani Industries has filed a petition, there's also the lenders' insolvency process. All of these petitions are going to be heard. After the NCLT pronounces its order, that is when the Committee of Creditors will decide on the future course of action. They have said that they're willing to fight this out at the Supreme Court, considering that the NCLT nor the NCLAT have jurisdiction to actually dispose of any insolvency proceeding against a company.
Hold the thought, Vishwanath. I'm just going to come back to you. But meanwhile, promoters claim that they're well within their rights to do this deal. A senior advisor to Binani Industries and a man who'd been part of this restructuring this agreement, Samir Kaji, argues that the deal with UltraTech is in the best interest of all shareholders. Listen in.
The objective was to maximize value for all the stakeholders and to prove that there is an equity value also remaining after all legitimate and logical liabilities have been met with. Unfortunately, we were never allowed to participate at these COC meetings, and since we were not allowed, we were compelled to go to NCLT or even the tribunal. In spite of all these options which we considered, the RP went ahead and completed the bidding process at their end and made an application to NCLT for the final approval of the nod. At this stage, we had no option. Our legal advisors forced us, or they told us that the only option you have now is to enter into a tie-up, or as you said, in inverted commas, side deal. And we, of course, had an option to go to ABC, but we felt UltraTech was the best. In our calculation, if we were to take a very fair summary of numbers we put down under various heads, you have secured creditors is A, then you will have statutory dues, then you will have employee dues, then you will have operational creditors. These are your major heads. We are 100% certain we can cover all these amounts without any difficulty. Then the institutions or the lenders should prove the number is 8,000 crores. We don't think so, it's 8,000 crores.
Okay, that's Samir Kaji, one of the advisors for Binani. But let's move on and address the larger issue. What is Binani promoters' locus standi in the whole process? What about other stakeholders? Anil Singhvi, Managing Director at ICAN Advisors, now joins us. Anil, thank you so much indeed for joining us today. It's been a very interesting development. Your initial reaction to the side deal that UltraTech wants to make with Binani, what have you made of it?
Thank you for having me. You said it's an interesting twist or turn, but I would call it intriguing, not interesting alone, for the simple reason that this case has been one of the first cases in IBC proceedings from July 2017. And as you know, first it was 180 days and that got extended to another 90 days, so 270 days within which you have to complete the entire process. Now today we are caught into a situation after having gone through this whole process of inviting the bids in first round of bids in December, then second round of bids in February. UltraTech participated in first round, UltraTech participated in the second round. What is it new today for UltraTech to really stand up and say that, oh, here is my check or here is my letter of comfort to all lenders and I want to do it? I want to just put this question again on that suppose if they were the winners into the second round of bidding instead of Dalmia, and if they had put in a bid a little higher than Dalmia, would they have really gone ahead and did what they have done this morning or yesterday on this? The answer is clearly no. Having lost out onto this whole process in the second round of bidding, which was, mind you, since I was part of that, to some extent I can take that credit of it. It was one of the most open, transparent, and more importantly, coming out with every criterion in which the bidder will be selected. Having gone through all that process, if today UltraTech wants to say that this was not an open and transparent process, and B, that I am willing to buy the entire shareholding of Binani Cement from Binani Industries for larger cause of minority shareholders and of lenders, I think it is really challenging the entire IBC process within which the IBC should work. So I think it's a completely a legal nuance and legal twist which is coming into play. More importantly, after the amendments which have come in November of 2017, where promoters have been to some extent barred, whether directly or indirectly, to participate in the whole process of that, because I think the lenders have taken a view and the government has taken a view that they can't be ceding sides of the promoters or the companies who are in control. So now this is a completely a new twist and new tale which has come in. But more importantly, I'm intrigued by the fact that today UltraTech is feeling that this whole process was not open and transparent, and they feel more or less like cheated into this whole process, which is not the case. If they really wanted to buy the Binani cement by offering the 7,000 odd crores which they are putting on the table, what prevented them? If they saw the value in November or if they saw the value in February, what prevented them in first putting out this check and not let this entire process run? You had 6 bidders at that point in time in the first round. You had second round also 6 bidders being there on that. Then what were they doing? It's a complete waste of time. If this was the ultimate game which should have been there, that yes, we want to buy out the entire shareholding of Binani Industries and Binani Cement, then why did they allow, why did they even participate into this? If this was the, they had in mind that we want to be the champions of the causes of the lenders and the minority shareholders. So I find it extremely intriguing for the simple reason that since they lost out in the second round of bidding, they have really got into a novel idea. And I hope that NCLT, NCLAT and Supreme Court should really lay down this, that you cannot have that you run through a whole process under IBC, all the bankers, several meetings which I've also participated in those, and after that you come to draw a blank saying that no, this whole process was not really required because there is somebody who's willing to buy the entire shareholding and creating value for lenders and minority shareholders. I mean, I feel very sad for the country. I feel very sad for the time and effort which has really gone in this. And third issue is that will it not be seen as being complicit with the promoter? And I think that has to be tested legally, because the amendment which came in was very clear. Directly or indirectly, promoter cannot be seen to be participating in the whole process. So I really will come to the issue of have my own personal doubts on this whole thing. And my question remains that if suppose they were the winner in the second round of bidding, would they have done this? Would they have chosen this kind of a path? No, if not, then
point well taken. I'll come to the issue of complicity, but just if I can just push the point specifically about what Binani has said and what UltraTech has said. Specifically, you know, the Samir Kaji, who's the advisor for Binani, comes and says that this is in the interest of shareholders. The UltraTech has also said that the process has not been transparent enough. What do you think were their complaints? Okay, we seem to have lost the link with Anil Singhvi. We'll try and come back to him in just a moment. The conversation has been interesting. UltraTech on one hand has clearly said that they don't believe that this process has been transparent, and therefore they've gone ahead and done a deal directly with Binani. Binani, an advisor of Binani was on Bloomberg Quint earlier this morning, and he says that this has been done in the interests of all stakeholders. He says that they're well within their rights to do this deal. Not just that, he's a senior advisor to Binani Industries, and as a man who's been part of the restructuring exercise, he says this a solution like this would be in the interests of all shareholders. Let me slip into a short break on that note. When we come back, we'll continue this conversation with Anil Singhvi. We also have an exclusive interview with Prince Alwaleed bin Talal on the Saudi corruption scandal that's coming up in a moment from now.
कुछ इसी तरह बच्चों के साथ साथ बढ़ते हैं LIC के चिल्ड्रंस प्लान्स, जो दे आकर्षक भुगतान बच्चों की हर बढ़ती अवस्था में। बढ़ो 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 मेरे संग।
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts. कितने plain और simple. Fog scent. Plain और simple white shirt को बना दे special और fashionable. Fog scent. New fashion wear for men.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
The headlines at this hour. Markets look poised for a positive close in 4 days. Metal and tech stocks lead the recovery. A parliamentary committee report shows that many of the government's flagship programs have hardly spent 1/10 of the amount of funds allocated to them. The US is said to be offering trade relief to countries willing to push its cause on pressuring China on trade policies. Uber halts paused its autonomous car tests after a self-driving car kills a pedestrian in Arizona. All right, let's do a closer look at how the markets have been faring. Smart recovery, as I said, both technology stocks and metal stocks have been leading the recovery today. Yatin has been taking a closer look in the last 30 minutes. Yatin.
Absolutely, Harsha. If you look at the Nifty trade setup, the advance decline ratio is 31:19 on the Nifty, clearly indicating that on the market breadth front, at least for the large caps, we have been doing well. Select metal and IT stocks have been gaining. So we have the likes of Tata Steel, Tech Mahindra, and also Bharti Infratel being the top gainers on the Nifty. Apart from that, the weakness in oil marketing companies continue. IOC, in fact, after the government has indicated and news reports are suggesting would buy their stake in Gas Authority of India, that stock is witnessing some bit of nervousness. Also, we have NTPC, UltraTech Cement, M&M, all of these stocks down almost 1 percentage points each. Of course, Canara Bank in the future and option trade is down on heavy volumes, in fact, almost at the lowest point in intraday trade. After we have the CBI, which has charged the ex-CMD in a loan fraud case. Also, other PSU stocks like Nalco, BEML, Engineers India are top F&O losers. However, on the flip side, we have the Anil Ambani group stocks, which are buzzing in trade on good volume. So we have the likes of Reliance Capital and Reliance Infra gaining 3 to 4% each.
Yeah, so thank you for that. That's the structure of the markets recovery that we've seen in the last 4 days. Let's talk about State Bank of India for a moment. It's moved the Supreme Court today seeking to get a stay on an order passed by a lower court which bars Reliance Communication from selling some of its business to Reliance Jio. SBI, which has a big exposure to Reliance Communications, wants the telecom operator to raise funds as soon as possible to repay its loan. Meanwhile, Arcom has also been dragged to court by Ericsson, which happens to be an operational creditor. Upmanyu Trivedi of Bloomberg News now joins us with the details. Upmanyu, thanks so much for joining in. You've got two creditors fighting it out for Arcom's assets. What's the update?
Yes, Harsha, this is an interesting case where different class of lenders have fallen on the different sides of the battle line in their efforts to recover their dues. Now, Ericsson had decided to move the arbitration tribunal to recover its dues of around 10 billion rupees, and the arbitration tribunal had given a stay order on asset sale of Arcom. A similar order was passed by National Company Law Tribunal on a petition by HSBC, which has also decided to invoke its remedy under the newly enacted bankruptcy law. Now, both these orders had put a spanner in the works for Arcom, which is trying to monetize its assets through sale to Reliance Jio. And now State Bank of India has thrown its weight behind Arcom by filing a petition in Supreme Court saying why not let the deal go ahead and so that the lenders can be paid. Now, State Bank of India's petition will be heard in Supreme Court on Thursday, which is March 22nd, along with the Reliance Communications petitions against the stay order. And as the deadline, March 31st deadline for the Reliance Jio deal comes closer, the ball is in Supreme Court.
Upmanyu, thank you so much for joining us with those details. That's the Arcom story for you. Let's talk about IOC and BPCL. They may buy out the government stake in GAIL. That's according to a PTI report. So how will the two oil refiners fund this deal? Samit has done a scenario analysis of different options before Indian Oil and BPCL, who have to shell out approximately 20,000 crore each if the 54% stake is split into half. Samit.
So first, let's see their cash balance. Now, Indian Oil Corporation, that is India's largest oil refiner, has a cash balance of close to 7,400 crore rupees, while Bharat Petroleum, BPCL, that is the second largest oil refiner in India, has a cash balance of close to 9,500 crore rupees. Now, these numbers are according to the first half of financial year 2018. Now, two facts. Now, in February, both the companies have declared hefty dividends. Now, Indian Oil declared a dividend of close to 19 rupees per share, while Bharat Petroleum has declared a dividend of 14 rupees per share. Now, that would have definitely brought down their cash balances. And also, if you see in the last 7 financial years, on a closing basis, none of the companies ever had a cash balance of more than 20,000 crore rupees. So, most likely, like ONGC HPCL deal, both the companies might take on debt to acquire this 54% stake in of GAIL. So let's see how that debt position would change and how that leverage would change from this. Now currently, that is for December ended quarter, Indian Oil Corporation had a debt of close to 31,900 crore rupees, while a debt to equity was close to 0.3 times. BPCL had a debt of close to 18,200 crore rupees, while its debt to equity was 0.5 times. Now, if they acquired debt of 20,000 crore rupees, that debt would increase by 20,000 crore rupees, but that debt to equity would hardly change. Indian Oil's debt to equity would change to around 0.5 times, while that of BPCL would increase to 1.1 times. Now, though both the companies are adding debt, their leverage ratio is still at a reasonable level. It's not an alarming level, that is 0.5 and 1.1. The second option that they have is they can sell stake in the listed entities that they own. Now, both the companies have stake in multiple listed companies that they can sell to acquire the stake. Now, Indian Oil Corporation has stakes in ONGC, Petronet LNG, Chennai Petroleum, Oil India and Lanka IOC, which is valued at more than 26,000 crore rupees. Now, Lanka IOC is listed on the Colombo Stock Exchange. On the other hand, Bharat Petroleum Limited has stakes in different companies like Indraprastha Gas, Petronet LNG and Oil India, which is valued at close to 9,500 crore rupees. So these are the possible options that these oil marketing companies have if they were looking to buy government's 54% stake in GAIL India.
Soumya, thank you so much for that. Swachh Bharat Smart Cities and the Pradhan Mantri Awas Yojana, these are some of the government's many flagship programs launched over the last few years. A parliamentary committee report shows that the big plans have stayed largely on paper, with very little being spent by the government. Ian Marlowe, Bloomberg News, who's gone through the parliamentary committee report, joins us from Delhi. Ian, thank you so much for joining us indeed. How large is the gap between what's been announced and what's been spent?
Look, Harsha, it's about 80%. The money that's being allocated and released by the center, the parliamentary committee found that only 21% of that had actually been spent. And that varies sort of by project. So some of the ones like Clean India or some of the Housing for All projects, those initiatives, some of them spent a little bit more, so between 20–30% of the money that was allocated, sometimes upwards of 40%. But then some of the programs like the Smart Cities program only spent 1.8% of the money that was actually allocated. So on paper, that's kind of how some of these projects are remaining.
What's been the government's response to this low level of spending, Ian, and what are critics saying?
Yeah, so, I mean, the government just came out and said these figures are flat out wrong. They're saying the parliamentary committee miscalculated and basically kind of said this is sort of a bureaucratic accounting error where, we release the money and then it's spent sort of in waves, and the sort of certification of how it's spent and all the kind of final, accounting just hasn't made its way back to us. That's what the government is saying. But the critics are saying, well, no, I mean, you've been using this excuse for years. They're saying this is just a sort of excuse that the government is trotting out. I spoke to the chairman of the parliamentary standing committee that looked at it, and basically, I mean, the numbers, the 1.8% for smart cities, the 21% for the sort of all of the 6 major programs, these are numbers that are actually coming from the government themselves. So the standing committee asked the government gave these numbers back. And then when the figures come out and it looks a little bit embarrassing, the committee is basically saying, well, now you're kind of trotting out these excuses saying, we don't have certificates or the accounting processes are to blame. And they're saying, well, no, it's really that the money hasn't been spent. These programs haven't been thought through. And the critics, and particularly Congress right now on Twitter, are saying, this is an example of Modi's schemes. They're sort of all marketing. They're slickly branded, but they're not actually being rolled out, at the state level, at the local level. So that's what the critics are saying.
Ian, thank you so much indeed for joining us. That's the government flagship schemes and what's really happening on the ground. Let's move on. Rising interest rates globally and concerns over public sector banks domestically have investors on their toes. In fact, Pashupati Advani of Global Foray is choosing to stay on the sidelines. Here are some of the sectors that he thinks there's still some value. Listen in.
According to me, we're switched off for the rest of our financial year. So we're just going to...
Financial, that's only 10 days.
So at least we're kind of quiet. There's some new issues coming that are absorbing some of the liquidity. So I think that's going to take some of the steam out of the market. And therefore, you're going to be drifting downwards simply because of that. I mean, there's 3 or 4 issues. I saw one of them is, I think, struggling. The other 2 will probably go through. But it's literally a push. And I think that's telling you what the status of the market is and that people are not jumping in with 2 feet. So I would just wait and watch a little bit.
The market is corrected, or the Nifty is corrected 10%. Some of the mid caps are down almost 30-40%. You must have your eyes on some of the sectors that could be looking good to accumulate, because in every sector there are some quality stocks which are giving you buying opportunities. Which are these sectors that probably someone who wants to invest, let's say for a slightly long term, they should look at?
Well, I've always been a believer in the cement industry, because I think there's projects to be completed. They may be completed in different owners' hands, but they will definitely be completed. I mean, particularly with RERA in place, and also roads to be built. So and we're seeing it where an UltraTech is being very aggressive about buying into Binani cement. So there is demand for cement. It's exactly the theme that I looked at, which is that the mid-cap cement companies are going to get bought by the large ones. These are actually the ones that are on the verge of not doing so well, which are coming out first. But even the ones that are running, which are 4, 5, 6, 7 million tons, they will eventually get absorbed. Because big is beautiful in the space, and I think that that's where we're heading.
What about autos as a theme? Because Maruti has fallen off a cliff. No one seems to be liking Tata Motors for whatever reasons. Are valuations expensive, or is growth uncertainty being seen by the markets?
No, I think it takes time to change cultures, and we've seen it in the US first, and we are following where less people who are young are buying cars. They're rather using Uber. One of my kids actually doesn't even want to learn how to drive a car. He has a license, but he doesn't want to drive. So, they're quite very happy with the Uber culture. And now if Uber goes driverless, you're going to need even less cars, because if people, do the numbers, they say that with proper utilization, the car is on the road today 8% of the time. It should be 80%. So, that's a lot less cars. Now, it's not going to happen tomorrow.
It's some time.
It'll take time. But I mean, I think those are the trends that people say, I don't want to be the last person in all the auto stocks. And also technology is changing because of electric cars. Definitely Mahindra's is being very aggressive in that space. They bought Reva, I guess, 4 or 5 years ago. And, battery technology is also changing. So, even electric cars will be, it's going to be interesting, and it's going to change the whole landscape.
Something that you know very closely, the buyer and the company, and that's JP. I'm using that as a term to talk about the larger infra pocket as well, or buying into distressed infra.
Rakesh followed me finally.
What are your thoughts here?
Well, I guess Rakesh has jumped in with both feet, so I think there is some method. The group as a whole is trying very hard to sort their lives out, and they've been paying back and settling and doing whatever they had to do and selling off assets. And I think we're looking at more of that. And I think they're the ideal in the sense of if it's a group that's actually going to get its act together and does it, then you're going to double. If it doesn't, it's going to halve. So it's again a very difficult play, but it's a play that is, it looks like it's going to happen.
What about the pharma space? They seem to be bleeding. Nothing's working for them. Yet no buyers at all, because most of them are trading at multi-year lows now.
Well, Big Pharma got their bad chits about 2 or 3 years ago and has been able to get their act together. The medium pharma is now getting the chits. So, it actually makes them targets for the big pharma, because they know how to do it. I just read that DRL got a clean chit at one of their factories. So they're slowly coming back onto track. And, I'm very comfortable being in the pharma industry, pharma sector, because, if in the generic space, they are the best. So, I mean, there's no question about it. And the only challenge is that in India, there is talk about cap on drugs, but, with the generic space, it doesn't really matter, but it'll, certainly help. But we are a country of high blood pressure and diabetics, so, there's a lot of future for them, even domestic.
Pashupati Advani on what sectors that he likes. The Trump administration, meanwhile, is pressing countries to ally with the United States in pushing back against Chinese trade policies. In exchange, the countries would get a relief from American tariff on steel and aluminum. That's according to a European official. U.S. Trade Representative Robert Lighthizer has been leading negotiations under which countries which may be excluded from the 25% tariff on imported steel and 10% on aluminum, which take effect on Friday. Meanwhile, the United States, the companies from the U.S., from Walmart to Amazon, are warning President Trump that any sweeping trade action against China could raise consumer prices, increase costs for business, and hurt stock prices. UK clinched a deal that will buy time in Brexit talks in a move that the European Union's chief negotiator hailed as a decisive step. But that's still contingent on finding a solution to an issue with the Irish border. The two sides reached an agreement for a 21-month transition period that's due to start on Brexit Day in March next year, and said progress has also been made on the broader withdrawal treaty. Brexit Secretary David Davis said a good deal was now closer than ever.
We must seize the moment and carry forward the momentum of the past few weeks. The deal we struck today, on top of that agreed in December, should give us confidence that a good deal for the United Kingdom and the European Union is closer than ever before.
He's still one of the most richest persons in Saudi Arabia, but his relationship with the royal family has soured. Prince Alwaleed bin Talal, the chairman of Kingdom Holdings, was put under arrest at the Ritz-Carlton, where he spent nearly a month before entering into an agreement with the royal family. Speaking to Bloomberg's Eric Schatzker, he says he's still very much in control of his companies, and his release was not subject to him accepting any guilt.
Why were you in the Ritz-Carlton for so long?
Well, you know, you have to ask the government, not me, frankly speaking. You know, I don't believe I belong there at all. So, you know, I am always, almost always in agreement with my government, but not necessarily all the time. For example, I give advice to the government in certain incidents and certain cases, and sometimes they listen to me, and sometimes they don't. It's like they give me advice on certain things, and I listen sometimes I don't. So there's an interaction between me and the government continuously. Now, on that particular subject, I don't believe I should be in there. Yet I'm there. I respect the government. I accept what they said, and I'm under the support of Saudi Arabia, under the King and Crown Prince.
What did the government want from you? Did they ever make that clear?
Well, you know, I will not dwell into the discussion that took place between me and the government of Saudi Arabia and through the representatives.
They must have wanted something, though.
No, I read what was written. You know, that they want a chunk of A or B or C of what I have. You know, and this it was all rumors.
According to one report, it was $6 billion.
Oh yes, I read $6 billion. I read more than that, less than that. I understand that. Though, you know, frankly speaking, you know, all these are rumors. But I will not dwell into the arrangement between me and the government.
Did it cost you anything to leave?
I will not comment on the content of the agreement between me and the government.
No, but what I'm asking is, did you have to pay the government any money? Did you have to hand over any land? Did you have to surrender any shares?
When I say it's a confidential and secret agreement, an arrangement that is based on confirmed understanding between me and the government of Saudi Arabia, I have to respect that. And look, I am a Saudi citizen, right? But I'm a member of royal family. You know, the king is my uncle. Mohammed Salman is my cousin. And this is the rule of Saudi Arabia. King Abdulaziz, you know, established Saudi Arabia, correct? So my interest is really to maintain this kingdom of Saudi Arabia, and obviously my kingdom also, and to maintain the relationship between me and them, and have it, you know, unscratched completely.
You understand, of course, why I'm asking this question.
Sure.
There are people, fellow detainees, who signed settlements and paid large fines. I want to know whether you're in the same boat or whether you're in a different camp.
Oh, look, that's why I didn't want to be in that case, because some of those people were there. I'm not going to name names, but I know them. 1, 2, 3, 4, 5, 6, 7, maybe quite a bit of them. That they really did commit crimes of theft. And they were involved in bribes, and they were involved in stealing funds from the government. We all know them very well. I know them. And I'm for having these people there. And I am for the anti-corruption that took place in Saudi Arabia. Now, unfortunately, I was added to that group. But fortunately, I'm out of it right now, and life is back to normal. So I'm not the person who's going to come and say, you know, I forgive, I forgive, but I don't forget. I say I forgive, and I forget at the same time also.
I also want to know if you retain control of your companies, whether you're still a 95% shareholder in Kingdom Holding, whether you still own Rotana, your media company, whether you're still in full control of your personal investment portfolio.
Let me assure you, look, I'm at Kingdom Holding, I'm the chairman. Obviously, you know, I did give the power to our new CEO, Talal Miman, more than a year ago. And also I empowered the Alwaleed Philanthropies leader over there to manage the process, and my private office and Rotana. So they all have been empowered long time before I went to the Ritz. I'm really the chairman, like the only chairman, frankly speaking, of all of them, and they're all functioning as usual. Even when I was in detention, they were still functioning. And there is a blessing in disguise, really. It was a conclusive proof that all these operations, whether it's Kingdom Holding, or the Alwaleed Philanthropies, or my private office, or the Rotana, they're functioning as normal as possible, even in my absence.
But are you still the controlling shareholder?
Well, look, very simple matter. You can go, look, Kingdom Holding is being publicly traded in Saudi Arabia. And Saudi Arabia is part of G20. And our stock market is very transparent, actually as transparent as the United States. So please, you can go to the list of holdings, and you look there, how much is my holding there? You know, you can see it's 95%. So you go there, you see what is right now, and you can verify that independently.
Your Royal Highness, you maintain your innocence. You say that you didn't sign a settlement acknowledging guilt, and that you are different, if you will, from many of the other people.
No, but we signed a confirmed understanding.
Yes.
And I say we have signed something, yes, confirmed understanding. I don't call it settlement. Now, some others may call it settlement. I don't call it settlement, because settlement, to me, is an acknowledgement that you made a wrong. You made something wrong. In my case, no, it's a confirmed understanding with the government.
You realize, of course, how important it is to be candid and honest with me about this.
That's why I'm with you now.
Because the circle of knowledge is too wide. Too many people know too many things. And if all of a sudden a different story emerges, your credibility will suffer.
Sure.
So everything we're saying,
you bet,
everything you've told me is 100% true.
I have a confirmed understanding with the government, and it's ongoing. Now, I elaborate on that. It's an ongoing process with the government.
What was it like, Your Royal Highness, being held captive by your own cousin?
Frankly speaking, it was not easy. You know, I have to confess that. It's not easy to be held against your will in a location. But I used to say, you know, look, this is your uncle, this is your country, and this is your cousin, Prince Mohammed. And really, when I left, very strange feeling I had. And I met with all, I gathered all the seniors of my companies and all my close confidants. And I told them, I swear to you, I have complete serenity, complete comfort, and no grudge and no bad feelings at all. And sure enough, within 24 hours after I left, we were back in communication, you know, with the King's office, with the Crown Prince and his people. And that's a very strange situation, by the way, not easy for that, but it's a fact.
And that's because what? That's because you simply had to move forward?
No, look, I'm a nationalist, I'm patriotic, I believe in my country. Look, this country has been established by the Al Sauds, you know, by my great-grandfathers. This country was done and established with our blood, with our grandfather's blood. So I'm not going to come and have this irritation that happened to me, you know, really, and to create a vendetta in me against my uncle, my cousin, and my nation and my people in this country.
Did you see Prince Mohammed or King Salman at any point while you were in the Ritz-Carlton?
No. During the Ritz-Carlton detention, no, I did not see any of them, but I was in direct contact through their people, yes. So I had a few representatives that goes to report to them directly.
How would you describe your relationship?
You know, no one believe it. After I left, it is not only as strong, it's stronger. And this is shocking to many people, even to my people, not only to you. I told them, my relationship right now with Prince Mohammed bin Salman, this guy, is not only as strong as before, stronger. And this is shocking to many people.
You've forgiven him?
No, I didn't say forgiven. I forgot and forgiven the whole process completely. It's behind me, completely, completely.
How often are you and he in contact?
Barely 3 days come without me texting him or calling him or talking to him. Barely 3 days happen.
You and he talk almost every 3 days.
I say we text a lot. We text a lot, but we talk less frequently. But barely a week goes without us communicating. Barely 3 days end without us communicating.
What about your profile, domestically or internationally? Will that have to change?
No, but you know, some you know, thanks God, many of the companies I deal with, and many of the banks I deal with, you know, they all been in touch with me, and I really take this opportunity to thank many heads of state in Europe, many heads of states in the Arab world, many heads of states in the Far East, and many ex-heads of states in the United States, really for caring about me and being in touch with my office and with me after I left and during my detention. I really thank specifically, you know, Warren Buffett, Bill Gates, you know, Lloyd Blankfein of Goldman Sachs, Corbett of Citi, and you know, President Carter.
They checked in on you.
Oh yes, and actually Bill Gates issued a press release about me. So I really appreciate, please, and I miss a lot of my friends here, because I have no time to mention all the names. So I really appreciate what they did, all those in the political arena, national, region, internationally, and in the business community also. So I really thank them for their care about me, and say I will never let you down.
Prince Alwaleed bin Talal talking about his detention. That's an exclusive interview to Bloomberg. A tragedy may slow the efforts towards self-driving cars. An Uber vehicle operating autonomously with a safety operator behind the wheel struck and killed a woman in Arizona. This is the first known pedestrian fatality from a driverless vehicle. Uber has suspended its autonomous driving pilots in 4 states in the United States. Bloomberg Technologies' Eric Newcomer has this report.
49-year-old woman was killed by a self-driving Uber crossing the street in Tempe, Arizona, Sunday night at about 10 p.m. The Tempe police are investigating it. Federal regulators are looking into it. Uber's paused, you know, their service, their testing programs while they try to figure out what exactly went on. The car was traveling about 40 miles per hour when the woman who had a bicycle with her was struck by the Uber, which was operating in autonomous mode.
Okay. How big of a setback is this to Uber's autonomous driving plans, but the overall technology, Eric?
Well, it's one of those situations that everybody expects, and it's still really upsetting when it happens. So I think that, you know, on the one hand, the industry knew that at some point, you know, this sort of first pedestrian death, somebody, you know, outside the car getting hit by a self-driving car, was inevitable. At the same time, I do think it's going to give people a pause, and we'll have to watch and see how regulators react and decide whether they need any new rules or laws to sort of control the rollout of self-driving vehicles.
All right, out of time on the show. Thank you so much for joining us. Bar Lunch Countdown is up next.